Hello, this is Dave, and welcome to Equities Story. I'm with the Wolf, and obviously just a general share advice as per the disclaimer you can see here on the website. I won't read it through, but you're welcome to take your time and read
Thanks
that.
for
Oh, I could anyway. Wolf, I was about to say something naughty then, and luckily I stopped myself.
You're getting into yourself way too much trouble these days, Dave. So yes.
No, I like it though. Right, can I talk about that? I think
Troublemaker.
Wolf, can I talk about?
Yes, you can talk about
Woodside. Great numbers, fantastic numbers. The chart looks good. It's got a breakout. It's holding up today. I mean, it hasn't really gone on with it, but for me, that's still a buy technically. And I wouldn't be, you buy things going up, and you buy things with fantastic announcements, and this had it all.
It did, and you know what? The dividend was the one that was for me very attractive. You just on these half-year dividends, I've worked it out for about 4.5% yield just on the half-year dividend. So if they get another 6 months of really good results from stronger prices and so on, you're probably looking at about 8%, 9% yield out of this. So this is a great dividend story at the moment.
All right, no, listen, thanks for that, Wolf. And you've seen a lot of stories like I think Santos on Einstein's had a nice candle just following through, and maybe Santos looks like it could nibble up a little bit higher as well.
Yep.
And you think some of these other stocks, like BT and all, is starting to look a little bit better.
Yeah, I think the key for us, Dave, both together, and we're probably in agreement here, it's about where are the energy prices going, and we're thinking they're going higher on the back of higher oil prices, right, and gas prices. So that's how we see it. It's just shaping up. I mean, everyone's calling we're going to have a bleak winter with, there's shortages of gas and oil and so on. So you can only see it one way, up.
Yeah, no, looks all right, Wolfie. Let's go through the announcements today. So the first one, which is up 18%, and again, it's worth talking about because it's another rock chip story, correct?
Yeah, I mean, the headlines really, you go, oh my God, 20% rare earths results. I mean, really? Geez, I have to have a look at this, right? Whoops, sorry. Got to put this down. So at the end of the day, you think, my God, it's great. But when you look at it, it's just rock chips. And, how many times do I have to say rock chips are pretty, not a very, very good indications.
Okay, Wolf, who's calling you? Your wife's away. You're getting little phone calls happening.
Maybe, yeah, maybe someone.
What's it? You're not being a naughty wolf, are you?
No, definitely not.
Okay, just checking.
Yeah, no, I'm not naughty.
Okay, because I think she does. I think she watches podcast.
I'm too lazy, Dave, to do anything else.
Yeah. Okay. Now.
No. Sorry, too busy.
Thank you, Wolf. Right, next one, NTO.
Yes.
Takeover offer around this 158. Why not? Why not? Perfect time. Take an opportunity to pick this up on the cheap.
Oh, you're picking up on the cheap, right? It looks amazing. Oh, 50% upside to the thing, but how opportunistic can you be? I mean, you're picking up on the lows, right? You go, wow, 50% upside to the last share price. They've rated the actual, I think they got 17% of the stock last night, Dave. So they were rating the piggy bank yesterday. But you know what? At the end of the day, it just shows that there is a lot of circling around by the private equity out there looking at cheap tech stocks that have been really crazily oversold for me, right? This re-rating has just, in some instances, have been just done way too much. And you can see that some of these are going to be picked off by the private equity.
But are they seriously going to be able to pick it up for this sort of price?
Well, I don't know. We'll find out because they've gone into trading hold. We're going to see what the response is from NTO, whether they are happy with this 158. I mean, that's what that price is, 158 that the offer is. Whether that's going to be enough. And when you think about it, in normal times, would you take 158? Probably not. But in this market, would you take the 158? Maybe. I mean, I don't know. I mean, if private equity can get away with it, good on them, because I think there's a lot of value in things like NTOs and others. But like I said, it brings you to the point of what else is cheap? We talked about this before, and that's why we've talked about AIM. We've talked about some of the other stocks like ALCs of the world, right? Whisper is another one. There's just so many out there that have been way overdone to my liking. So, it doesn't, even though it's not trending, some of this stuff, do you hold on to some of these things, even though it's not part of the CTM, but the results are good? Do you keep them? You can make a case and go, yeah.
Yeah, it depends. Listen, it depends if it's in your plan, doesn't it? We talk
That's
about.
right. That's right. Yeah, it's a tough question to answer, isn't it?
We talk about the importance of having a plan, right? So, if it's in your plan, I mean, personally, myself, I think it's just hard, Wolf, isn't it? Buying stories, hoping they're going to get taken over. You just never know.
Absolutely. That's not the way to play it, right? For sure. Because, while there might be some takeover offers, and we've seen like Nearmaps, we've seen IFM, now NTO, not everything's going to be, looked at. Of course, it's going to be very selective. So if you are going to maybe keep something that's not trending, but you're going to go, this is a great story, it's it's delivering the results, at least make sure it's a decent story, it's, it's quality, where there is a remote chance that someone might be looking at you.
All right, well said, Wolfie. But maybe one of those that we do like, maybe it's not there at the moment because there's an issue between the CEO, AMS.
Oh, look, first of all, the results were just okay, right?
Yeah.
They flagged it anyway. They were just okay. But it's the CEO. Like yesterday, I saw the afternoon announcement saying that ex-CEO based in the US is going to litigate AMS for, I think, wrongful dismissal. Because I think, remember, she didn't want to move to Victoria to be heading here, so they decided to part ways, but obviously she's not happy about it. So we'll see what happens. Breach of contract, maybe, something like that.
At this point, and the share price, so maybe that's one that you definitely wouldn't be hoping
Yeah,
at the moment.
That's probably not quality at the moment, I'd say, yes. Exactly.
Now, just very quickly, little Link that own 44% of PEXA.
Yep.
So at the moment, Link has a market cap of just 2.3 or 2.4 billion roughly. I think their sort of valuation, PEXA's worth for them around $1 billion of that market cap. So the question is, Wolf, it's an interesting company. They've got a takeover offer at around 483. But there's a lot of government legislation and that they've got to go through to get that takeover offer to happen. And obviously the market is saying it's not going to happen. So there is potentially 10% there. How do you see this story? Now, it's not a CTM story or Cincinnati system. It's not how we buy stuff, but it is fascinating little story, isn't it? Fascinating company that that sort of has this great business. The other side of the business is sort of, I suppose, the issues there. They've got a lot of debt, haven't they? 650 million or something.
Yeah. Look, the debt is still quite big, and actually went up this year, which is not ideal. You'd think in a turnaround story that we're trying to get the debt down, right, as quick as they possibly can.
Yeah, definitely.
There's definitely issues. Is it another EMP in the making? It's going to keep going down and down and down and down. Maybe. But how I see this, right? This is what I'd be doing if I was the management here. Obviously, the jewel crown is PEXA, right? That's where I'd say that's where the growth is going to come from. This is where they probably should be holding on to this PEXA as long as they can, not sell it too early because it's growing, it's going better and better. If I was PEXA, if I was management of Link, I'd be getting rid of all the other businesses that are just really underperforming, holding on to PEXA, and maybe looking to acquire or become one of those investors in those really strong growth stories out there. Right? That's what seems to be going quite well. Or at least extracting as much value as I can, out of your PEXAs, because I don't think overall the business is probably undervalued in a way, Link. So like I said, there's sell some of the businesses to whatever, but don't sell the whole business because you're going to probably cost yourself down the track somewhere. So that's what I'd be doing if I was a management. But, is there value in this? Yes. Is it going to go through? I've got no idea. Obviously, the market's saying no at this stage.
And Wolf, this is
shareholders accepted it already, right? Shareholder says, yeah, we want this for 83.
and Wolf, this is private equity.
Yeah, it is. Yeah, it is. So, I think there's 6 more steps they have to go through, like the FIRB approval, the ACCC, UK approval board. I think the Bank of Ireland, stuff like that still has to go through. So look, the possible we'll get through and we'll, so there's a maybe 10% play in here. It's not the way, again, I play things, but it seems even if the takeover didn't go through, I think eventually, right, this will probably be good, will come good sometime along the timeline. God knows how long, it could be, like I said, it could take a number of years, but yes, I just hope they don't get rid of PEXA, because that's going to leave them with just a pretty boring old business.
All right, it's interesting, but again, not really for us, but
No.
maybe other people have a different sort of view on these sort of stories, might be interested.
Yep.
PTG. How was their announcement, Wolf?
Very good. I mean, they already flagged pre-released the results that they're going to come through. 20 million in revenues. I mean, 100% growth on the previous year, and they're talking about they want to grow further. They want to eat more into the market share. They want to grow profitably UK business, right? All the right words you want to hear. And again,
hang on. Did you say UK?
Yeah, I know. And I'm just about to say UK is not an easy business, but you've got management here who's done very, very well previously. They know what they're doing. So again, it's not the way we sort of, it's still, I love the story. And I've been thinking, when is the time to get back into the PTG things? For me, maybe just give it another, maybe 2 or 3 months, right? Give it another quarterly. Because what I want to see, another quarterly maybe of cash flows, just to see how they're performing in a market that's deteriorating, right? We know that the real estate space is getting worse. So we just want to see another quarterly to see how they're managing through that. So I would not be jumping at this, and I probably have got quality stories up there further along for me, like a PEXA, like a SiteMinder, and so that I'd probably be more interested in at this stage. But definitely like it, definitely something I probably want to get back into it, but not now.
All right, PPL. Wolf here. It's a very exciting story, but again, just looks technically it's on the way down again. What's happening? What's happening here, Wolf?
There is value in the story, however, lack of proper outlook on here, right? So they delivered a decent result today. If you have a look at the numbers, they're actually quite good, but there's just a lack of clarity, lack of outlook. People are thinking that, where is it coming from? And I know Martin, we spoke to Martin, and he's very good at running the show. But I think as an investor, you want to see something to hold on to, and for me, holding on to is like, give us a strong outlook. And if you can't give me that, then I suppose the investors get really nervous and go, well, maybe there's something better stories out there. And it sort of brings you to the point of maybe there won't be much growth, right? You've got to start questioning. Maybe there won't be much growth. So why would I be in this when I've got other growth stories I can be in? So I can understand, when the CEO is coy to give you some sort of a proper outlook, and probably for a reason, he doesn't probably want his nuts on the line and then get absolutely hammered if he doesn't hit it. But the market expectations are difficult to fulfill, unfortunately.
Yeah, well, those investors there look very happy, don't they?
Yeah, as usual. But at the end of the day, Dave, it's a good story, value there. But
I must be honest
there right now.
Yeah, it is. But it's a story to obviously. I really like that CEO. I thought he was very positive.
Yeah,
he really knew what he was doing. Yeah, but a bit of guidance, a little bit lacking. So,
yeah.
But I mean, Wolf,
when you've got to say like a PEXA versus PPL, what would you buy first?
Yeah,
of course you go to PEXA, right?
Yeah,
that's the problem you've got now. You're facing, because the other companies have come back as well, and you're thinking, well, I'm going to go to probably something that's much stronger revenue growth or whatever.
But Wolf, I mean, it's very difficult. Most of these businesses are gonna find it very hard to give guidance, aren't they? The world is sort of a little bit uncertain at the moment. And
Dave, I'm not going to hammer them for not giving you guidance. I'm just saying that investors are probably going to get more attracted to a company that gives guidance, right? That's you've got that outlook when you're thinking to yourself, there's much more clarity. I'm much more safer in a story that I know where it's going to go to next. versus something like this. Anyway, maybe we can't give you guidance, which is fair enough, but that's why I'm just saying it's
okay.
For investors.
Is ALC one of those companies?
Yeah, it is. I like ALC, and they have actually given you a decent update where they're standing at the moment with the FY23 revenue growth and so on, and they're looking actually very good, Dave. So here you've got a company that's really, I love the space they're in, right? Going quite well, and almost you can make a case. I don't care whether the chart's saying I'm holding on. It's just one of those things.
I mean, you say going quite well. Aren't you being a little bit sort of tough on them? The full year revenue is up 33%. I know they recurring revenue of 23 million, up 42%. That's very good, Wolf.
Dave, I'm always gonna be under promise over deliver type of guy, right? So I'd rather be a little bit, not too gung ho about getting too excited. It is definitely a pretty strong results, 33% and 42%, like you said, on the recurring revenue. But you know what? I still want more out of this. I'm a hard taskmaster. I want to see more out of business, and especially on the bottom line, because you can see it's just more EBITDA. I want to see them still eke out a bit more out of this, right? Bottom line. So I like it. Good growth next year. I'm expecting. So I'm holding on with the expectation that is a cheap story, and I going to deliver another, maybe get closer to the $40 million in revenues.
Yeah, it does look like it could be again a nice growth story for next year. So and some nice a nice little outlook there as well, Wolf. So well done, Wolfie. So that's a story for you. Would that be a Pro Medicus be interested in an ALC?
No, very different businesses, Dave. I think PME's got enough on its hands anyway. It could be maybe a private equity that might be interested, unless something else is in the same space that they want to integrate into their thing. PME is in a different space. I know than the healthcare.
Mind you, I do like the ALC story in a very tough world, like safe sort of medical story with safe software. You've got to like it. Yeah. Wolf, ATA, fairly sort of not a bad little chart in the early days. What do they do?
Oh, Dave, let's bring it up. Come on, bring up something new that we haven't seen before. And I really haven't ever looked at it before because it's only been listed for less than 12 months. So normally we give it 12 months to find its feet, and then we'll have a look at it, right? So ATA, bring it up. Let's have a look what they do, and let's see the numbers. Because the numbers look pretty interesting. That's why I put it on there for everyone to just have a, maybe add it to the watch list, whatever, right? So just keep going down. Yep. You've got Tura, stop there. So first of all, what do they do? I think they are in the IT business. So we got a revenue increased 37% to 134. So you can see it's not a small business, right? It's got something already decent. And you've got an EBIT increase by 29% to 12.4. So at the end of the day, it's a business that's going okay. And if you go down further now to the business overview, right? So what they do, Australia's leading advisor in IT solutions. So in the IT space, it's going to be smaller type margins, but if they can grow and execute well, it could do quite okay. So I'm just going to bring it to everyone's attention, just to give you another story that it's actually going okay-ish and something to watch for the future. Artura has been only listed for a very short amount of time.
It's an interesting story. It's they seem obviously quite busy as well, looking here on the acquisition front.
Yeah, all these stories will be, probably want to grow, and on top of that, it's organic growth. They probably want to grow through acquisitions, and that's exactly how they do it sometimes. So NPAT 9.5. So it's a profitable business. That's why I want to look at these profitable businesses, see if we can make a buck or two.
Yes, it's an interesting one, that, Wolf. So thank you. I'm bringing it to us, and the chart looks actually very, very good. If it looks like this by the end of the week, it must probably a little trade up to 80 cents.
There you go.
Wolf, DSE drop sweet. Okay, technically it's not trending, but you like the story. For you, fundamentally, it's a keeper.
Yeah, LC and DSE are probably the two that I've really held on through the thick and thin. Right? It was like one of those, punch me in the face a few times. I don't care. I'm going to be holding on to those two stories because they've been really delivering quite well. for me. And again, DSE came up with a very good, and I love the fact that, they're actually looking after the bottom line, right? So they're not one of those spending, and then the market hates them for that, right? That's why DSE and ALC I like from that side point of view. And again, they're on track for probably get close to 20 million in revenues for the FY 22 or 23 now. And overall, a really good story to have in a portfolio where it's in really, you can call it a, what do you call it? Cybersecurity, because it's all about data backup, right? So for me, doing all the right things and growing quite nicely.
Thanks, Wolf. The opposite may be CGS, a little bit boring. I think if you were still in this one, you'd have to get out of it.
Yeah, look, the actual looks like the numbers were okay. I think the outlook is still this here. Again, lack of maybe proper clarity for investors out there. So yeah, it's just one of those things that the market just doesn't like it is at the moment.
All right, Hills. It's sort of not trending too well, but a fairly decent announcement for you, Wolfie.
Dave, I'm looking at these Heliuses and SHL, the Sonics, just to see where the pandemic is with testing and so on, the pathology stuff, and they actually delivered quite a nice numbers today, Helius. So look, I still prefer the Sonic healthcare business to the Helius business, but there is definitely some merit in the results today that, if they start getting over those trend lines, you might start thinking about trending it.
All right, thanks for that, Wolf. Now, MEK. The results today were very, very good. Not the project, obviously, we're looking for, the area of the drilling we're looking for. I don't know, a little bit of a come down a little bit, maybe an opportunity, Wolf.
Yeah, look, profit taking, nothing wrong with that. Definitely the market's probably awaiting those St. Anne's results. These weren't the St. Anne's, this was the Turnberry results, which were still very good in its own right and fairly consistent with what we've seen previously. And remember, consistency is one of the keys for gold deposits, right? If you can get some consistency in your deposit, then you're probably on the right way to having a profitable operation. So that was nice, but of course, the market, the reason why it went up was on those St. Anne's results. So the market went, oh, well, where are those St. Anne's? They're coming. They've said it in they said it in the results. So not too far away, guys. But yeah, look, if it comes back to that 6 cents, Dave, I'd probably then have an opportunity to get in.
Data, really just struggling with those margins, Wolfie, aren't they? Very, very tight. It's quite
look, it's not their fault, right? It is a difficult market. I was a little bit disappointed in the numbers today. I know that the top line shot up like 30%, but that was on acquisitions really, more than anything else. And it didn't add much to the bottom line. In fact, bottom line, I think only grew about 7%. And then unfortunately, EPS only grew very, very, very slowly, anemic growth in EPS because of their capital raisings, right, that they've had. So really, it's too expensive for what it is right now, Dave. I don't know if you can make a case even to hold it at the moment. I think it's just too expensive.
Yeah, listen, the chart looks boring. It's retail. It's going to be a very hard space at the moment, Wolf.
It's a hard sell.
Yeah. TR, Colstock delivering. Are you fundamentally a buyer, holder?
I'm not a fan of these guys, right? I know that they're doing okay. I think the reason why I'm not a fan, I think that the majority of the business is in South Africa with coal, and you know how I feel about anything outside of Australia.
Yeah, definitely.
So yeah, pass for me, but definitely should have benefited out of that, and they have.
But what's the sort of value of the story? I mean, okay, I know you only love anything in Australia or Poland.
Yeah.
But what's the P ratio? Because
look, again, Dave, I think the companies probably don't work on P ratios.
Yeah, I know, but just to get a feeling.
It's a good question. Look, how would you value these things? And this is a million dollar question. I think the best thing to do, right, is for those that want to know how far this can go, have a read some of these broker reports, see how bullish they are still, because it's all about where they feel if there's further maybe the production upgrades, where they feel the the coal prices might be and things like that. Look, to be honest, it's a good question. It's probably a bad
listen,
question.
I know you, with P ratios with coal stocks is hard because they're so volatile, right? But I think it gives you sort of a bit of a feeling, because when you've got a chart like this, it moves a long way from the trend line. You're trying to work, could it go higher? Now you've got the market cap already, Wolf, at just under 879 million, so it's quite high.
Yep.
And you know, the interesting thing on last year results, it was trading a P of 31, which obviously, if that's correct, and I'm not too, it's what I've got here on market index, it's quite high. And maybe now, okay, they're down a little bit. Well, they'll be down quite a bit, maybe down to 20. I mean, like I said, it's hard to value them, but you could argue it's for a stock like this, maybe it's looking expensive, isn't it?
Look, maybe look at it. Don't worry about the P. Like I said, let's forget about the P. Let's have a look at the profits that they made, right? 170 odd million. Market cap is about 900 million. So at that rate, if they can come up with another 1 or 2 or 3 years, they're going to be paid for itself in 5 years' time, you know, on that sort of run rate, which is still attractive. But, you know, this is the thing is, can this be sustained for another 5 years? I don't think so. So I'd say, you know, maybe what you could say is it is well valued, where it's probably should be right now.
That's what I'm saying, because you wouldn't get these.
Yeah, exactly that. So, you know, maybe the P does have a say. Maybe you're right in this case, where you go only trended for the time being. I don't think there's too much value to be extracted out of this at this stage, because we know that eventually things will come back to normality.
So yeah, so just try and mix them up with just a tight stop. Just if you're in this, you'd have a stop just under that $1, right? Yeah, no. It's interesting. I mean, yeah, it's hard. They're hard to value, aren't they?
Yeah, look at the exercise. You can make, like I said, you can probably look at it a few very different angles, right? You can look at it just from a profit point of view. You can look at the P point of view. You can look at it, you know, the cash flow point. You know, there's just so many ways of skinning these cats here.
It's why they run over. It's why they overrun and undersell, don't they?
Yeah, and you know, the problem is from one year to the next. They could have, you know, like you said, we could have one loss-making year. We've had it with WHC. They lost money last year, and this year they made almost $1 billion. I mean,
it's crazy. It's crazy. All right, Wolfie. On that note, listen, DGL. I do apologize. We did think they were going to announce today. It is tomorrow, so still an opportunity to get in if you want to buy that hot stock.
Yep.
And apart from that, Wolfie,
tonight, don't miss out tonight's Ask the Analyst, because we're going to keep going till midnight.
Well, yeah, we're going to have to, because you go on holiday soon, so get your questions in.
Exactly.
But we will be joined next week on Ask the Analyst. Wolf, while you're away, Mr. Claude, the famous Claude, on Ausbiz TV will be stepping in.
Yep.
And he'll be doing TradeWatch with me, a few, and so basically, we're not going to miss you at all, really. Good.
I can just relax then. Fantastic.
Yeah. So if you want to make it 8 weeks, 10 weeks, we don't care.
Yay! So I'm not going to get phone calls going, oh, please go back, Wolfie. Oh, good.
No, I will be crying. But we are doing, Wolfie, aren't we? Fridays, a Friday special while you're away.
Okay. Yes, we are. And the thing is, like I said, I just want to quickly mention that I am working on a top 10 list, looking at all the results, my favorite results, strong results, good outlook, what to buy post-result season.
All right. Thanks, Wolfie. See you later. Bye.
Yes, bye.